uh, Take a look at the charts, talk a little bit of what happened last week, and see if there's any interesting trading opportunities for this week. My name is Alejandro Zambrano, and I am a market analyst, and I've been trading the market since 2006. Before we start, though, I need to stress that trading financial markets unfortunately is high risk, and we may lose all of our invested money. Okay, so what happened last week? There was actually quite a big thing. Maybe if you're new to the market, you didn't realize that, but things have changed. And we saw people reacting. As you know, stocks were down, crypto was down. Some altcoins, by the way, I think down about 40%. Litecoin, think about that, down about 40% or so from its recent high. And the dollar gained massively. So why did this happen? Well, because the Fed delivered a bitter surprise. So the Fed now projects inflation to rise in 2025. Okay, before they thought that inflation was going to be roughly at the 2.1% by the end of next year, which means that they would be at target. So with that, they now think inflation is going to be higher. I think it was roughly 2.5% instead of 2.1. So that means that before they thought they were going to cut 4 times for a total of 100 basis points. That's a full percentage points, by the way. Now they only think they're going to cut by 50 basis points, which is half of percentage points. So this is actually a big move that maybe would have gone unnoticed, but they're now pausing. And you know, a pause can become something that is extended. So why is it? Well, because of inflation. And why does it matter? Well, do you remember when they were increasing interest rates, how that was hurting the economy and hurting the markets? And then they started to cut, and everybody got super excited about that. Well, that excitement of lower interest rates is now gonna be gone very soon because inflation is looking to be too high. So why does it matter that they cut rates? Well, because people have mortgages, so they need to pay for their houses, they have car loans, and so it costs a lot of money to maintain that. Number two, if you want to make investments, you want to borrow money as a company, then you now have to pay, roughly at least 4% or so, depending on, what kind of loan you want to have. So it's expensive. So this would ultimately hurt the economy and slow down the economy. That's what they have to do. They have to slow down the economy to avoid inflation going crazy like it did under COVID. What else? The US economy and the service sector in particular improved. It went from a good 56.1 to a very strong 58.5. So the service sector in the US is doing really good. And that is obviously something that is influencing the Federal Reserve. In Europe, services as well went up to sort of the 50 level, so it's not shrinking anymore, the service sector in Europe, but manufacturing is under heavy pressure in Europe and under some pressure and contracting in the US. So this again, you have a stronger US economy or a strong US economy and a very weak European economy, and that is forcing the Euro USD down, as you saw. Now, this is the big thing. And if you were not trading last time Trump was president, then you're going to see that it's a very different way of trading. Well, trading is the same. The problem is you'll be up in profit sometimes, and then he says something, and then you're not. So here, for example, he said via his social media platform, I told the European Union they must make up their tremendous deficit with the United States by large-scale purchase of our oil and gas. Otherwise, it's tariffs all the way. So obviously, tariffs is not good, really. Like the world economy has grown the way it has done because we don't have too many tariffs. So, for example, when you want to buy toys for your kids this Christmas, most of that would be created in places like China, where it's cheaper to create and manufacture these toys. And at the same time, like the Americans, when they want to buy a German car, for example, they can buy that from Germany, right? Or anything else that Europe does good. So that, if there's tariffs on that, is obviously going to be much more expensive. So now, instead of importing from Europe, they maybe would buy domestically. So maybe that is not of the same quality necessarily. The same way as the US produces services that are of high quality. For example, if you're into advertising, then advertising on Meta and Instagram, like on their platforms, makes a lot of sense. If you're using Amazon services, like all that are American companies, right? So there is business there, but of course, if you put barriers, there's just less business. With less business, less money, everybody loses. So this is the big thing. Now this, we'll see how this plays out, okay? But just need to remember, if they would introduce tariffs, it's very likely that there's gonna be losers, okay? Especially if they say, oh, we're gonna add 20% or 10%, whatever it is, on all your goods, okay? That is when we have what we call universal tariffs. That would be really bad. The US tried to do this about 90 years ago, and it was one of the reasons why the Great Depression extended for another 2 years. The Great Depressions. Did you know that in some places in the US people were starving because of this? Okay, it was so bad. And I'm sure that people were starving in Europe as well. Obviously, it's a bit of a different times, but obviously not good, when people losing their jobs and, can't eat, whatnot. This, if it would happen, expect the dollars to gain massively and expect the stocks to decline a lot, maybe 10, 20%, sorry, 20, 30%. So it could produce interesting trading opportunities, but realistically, it's gonna be much more slower, okay? So that is what we're watching, and yeah, change in the market. Realistically, stocks weak, crypto weak, and you're gonna have Trump joining here as well. He's just gonna make life much more difficult. So the 2024, the easy trading you saw in 2024, realistically 2025, that would be gone. It's gonna be a different market altogether, I think. What's gonna happen over the next 2 weeks then? Well, I would say, and we know, it's gonna be public holidays. I think it's 25th and 26th. Europe is closed, and US as well. So if you're trading indices, and you need to bear in mind that there's not going to be too much of activity, so the market literally just freezes. It doesn't mean you can't trade, but I would focus on crypto. Crypto, especially alts, can be up 5-10% or down 5-10% easily. So if you wanted to trade, you don't want to take a break, I would look for and trade that, okay? Now we have some events: Consumer Confidence Index, Durable Goods Orders, Initial Jobs Claims, and Manufacturing Index for the next 2 weeks. Plus we have the NFPs. I forgot to add it, but we have the NFPs on the first Friday of the year, which should be January, I think it is January 3rd. Yeah, January 3rd. We have the NFPs on that date as well. Now from a technical point of view, last week we said we wanted to be bullish above this level. But from a fundamental perspective, as you know, I've been looking for this to go down to parity. Now, if we would have bought here, we would have obviously gone up a little bit, but ultimately been stopped out. And now, if we shorted here, this would have been a good level to book profits on. We discussed this last week. And now we're going up again. But as long as you trade below 105.17, I see no reason at all to be bullish Euro USD, especially from a fundamental point of view. There's absolutely no reason. Now you might say, well, all the bad news has been priced in. Yeah, maybe it has, yet we need to have good news to buy. Do we have any good news? Do we have any reasons why we should be buying right now? Not that I can think of. So I wouldn't get too excited, and I would continue to be bearish. How about the S&P 500? As you might remember, we said to buy here for this to go up. That went well. And then we said again, look to buy on a dip, and that would have been a stop out, okay? But this is how you differentiate. That's how professional traders do it. You see, we had a stop level, trend defining level just here. So if one would have bought at the buy level we discussed, you would have lost about 30 points. People with no stop loss would have lost 200 points. So almost 10 times more. So we were stopped out here on this view, and we're looking at this today. The question is if this is going to hold. I am not 100% sure about that. I would rather buy here at 5,700 around low levels and then for this to slowly go up. Now, why would we might still buy here? So if we have a correction and buy here, why? Well, because from today and then until the first week of January tends to be the strongest days on an annual basis, or like on average, seasonality wise, for being long stocks. So maybe one could buy a dip here and then for this to go up. But remember, it's gonna be quiet. So if the price is 5,900 when we do the next market update on January 6th, it would not surprise me one bit. So how about gold prices? So gold prices, I was bullish above this level. Now, the fundamentals suggest we're gonna go lower. The technicals, we're stuck in this big triangle pattern. So I would assume that we're gonna be stuck here further, more. But if someone put a gun to my head and said, you need to take a decision, then I would say be bearish below 2,652. But if you, what you're doing here is you're selling gold and you're buying dollars, right? So if you want to buy anything, I would buy dollars against the euro or maybe against the Australian dollar. I think that's where the easier part is. Because look at here, this is the Aussie dollar. These are the lows from September, October, I think it's November 2023. We breached that level last week and we're at the levels from September 2022. So we just took out these levels and there's some levels, but they're actually much lower down. It's not 58.81. It's much lower down. So as long as you trade below 0.6342, I would say we're gonna go up and then probably down. I think we're gonna go down. So Australia, why Australia? Well, because A, they have lots of business with China and China is not doing good right now. Number two, with tariffs kicking in on China, it's just gonna hurt the Australians more. And with the uncertainty coming with Trump and the higher interest rates, you know, copper and iron ore metals that they export in Australia are probably gonna be seeing lower prices. So their number one export products lower in prices, their number one client, China, suffering and probably suffer more because of tariffs. So obviously not a great time to be buying the Australian dollar. And the charts are telling us the same, sell the Australian dollar. Bitcoin. So Bitcoin, last week we said if we push above here, we can go up to 111K. We went up to about 108, 109. I was long, but sorry, yes, I was long and I did not book profits. The market came down and I got stopped out at entry. And I got stopped out in a few other bits. So it wasn't a great week last week, but it wasn't a bad one either. It wasn't like managed. And the whole market then just went crazy, went all the way down. And now there's some support here at between 90 and 92 and 90K. So I think if we're lucky, it's just gonna trade sideways here. But what we need is we need another reason to be buying again. Last time we had here, this was the US election. Trump said we are going to, or he won. Now we need confirmation. Will they introduce a Bitcoin as a reserve at the treasury? If yes, this is gonna go up to 150, 200K, or 150 at least. If they don't, it's probably gonna trade sideways. And I think what's happening here as well from a technical point of view is that you have all these people that join very late. And what's happening is that the market likes to punish people that are late. Okay. To give you an idea, I bought crypto, quite a lot of crypto, in November of last year. Okay, last year. Obviously, it's been a year. I've been trading it in and out. I've been holding it. So the returns I've been making are very different than the ones that I was doing in November of last year. So what did my wife say? Oh, I want to buy a bit too. So she decided to buy, not a huge amount, but a small amount. Even though I've been telling her that I've been doing good on crypto for a whole year. So that's a typical latecomer behavior. Like you wait for too much confirmation until you buy. So I think she bought somewhere around where we are right now, maybe a bit lower. So she's short of breaking even. So, but this is very typical. Like right now, this November, people are contacting me, friends that know I'm into trading. They ask me, what should we do about crypto? Okay, should we buy now? And the market loves to punish latecomers. So I think what's going to happen here, we went down, and because of the bad news at the Fed, we might have another slide down here, which would effectively stop out all of the people that bought and have stop losses here. And then maybe go upwards, okay? So we have a bigger correction against this November move. So that's what I'm looking at. Now, there's two ways of doing this right now. Three ways, actually, to be correct. One is buying here. One is buying closer to 85. Okay, maybe stops around here, 80, 85. That's two options. The third option, which is the easiest one to trade actually, is when you just let the market wait, trade sideways, and then push to the upside. If the market needs to correct the way it corrected last time, then you'll be waiting until February until we get a breakout. So I would actually personally prefer if we go down a lot, because you're gonna see one point the Bitcoin is down with 10% and Ethereum is down with 15 and some also down with 25. We saw that actually last week in some alts, and then one can buy, especially the alts, and then it goes up, and then you can bag 20-30% in 24 hours on that. And then if you want to hold it for a couple of months, yeah, I might go up to the all-time high. But those are the three things doing: dip, buying here, here, or breakout. And that's it. That is today's market update. Let me know if you guys have any questions, and I'll see if I can answer them. All right, so no questions. If you do have any questions during the week, you can just pop them in the chat, and we'll revert back to you. Thanks so much for watching, and have